Why poor high and poor low are important and why we say the market may revisit that structure. Well, see, I'm not saying the market will revisit that structure. What I'm saying is that if market decides to go above, let's say this HVN, well, this is where most trading occurred on this day. This is where the buyers and sellers fought for control. And by looking at this follow through, we know that the sellers won. So if you're going back there, these sellers are supposed to defend, right? That is one thing. Now, if you find acceptance about that, what does that tell you? That the seller strength is no longer valid and buyers have the control. So they'll take the auction higher. Where will they take it? Okay. Where will they take it? Now, looking at this, one, this is a swing high. So obviously there are some buy stop losses above that. So they would like to do that. They would like to take those stop losses out, right? Because then the buy stop loss will come in. Either they can exit in those buy stops or those buy stops will propel the market higher towards this because smart money is not selling. So any buying that comes in that will quickly move the markets higher. So they can go towards this high. All right. Because what is above this high? More buy stops. So let's say market goes higher and hits those buy stops. So a lot of buying will come in here. And let's say smart money has bought here, they will exit their trades. Make sense? So that is why you want to look at these references. Now, when I say a poor high, so what has happened? Market go to a reference, comes back, goes to that reference exactly again, and then sells off. So when you have this kind of an exactness, here this is a failed auction. Why I'm excited about it? Because there is a big difference. So we went higher. We found that the auction exhausted all the buy orders here, right? And then it went lower. So there was no buying left. But here we are returning from an exact reference. What does that tell you? That traders are watching this high, and as soon as we come here, they sell again. The auction did not get a good chance to take out stop losses above this and reverse. That is why if you have a tail, then there is a chance that that kind of stop hunt has happened. And now the market is moving lower, exhausting all the buying. But here we are not sure. And when there is indecision, let's say the smart money wants to push the auction lower, right? So either they can force the issue and continue to move lower. But usually the smart money would like to find out like whether there is any pending interest, buying interest above this. So they will take the auction there. And if they don't find anything, then it will reverse. That is why poor highs, poor lows may attract the auction because we have done that. We have gone to a reference, 2 times. And looking at this A period low, people started buying in J period. They were also looking at this strength. All right. But then why, let's say we have formed a low. All right. So let's take this example. We have a nice trend day. Then we come to this day. All right. We open here, 22nd December. We come lower. Right. And then we go back up. Now we have left behind a nice swing low. Why the auction finds it necessary to go back and test that level again? All right. Okay. Now, if let's say it wants to test that level, fine. No issues. We have a swing low and we want to test it again. The auction should go below that. Because when you come to the exact reference, everyone is watching the reference. People have put their stop losses below that. So why have we not gone sufficiently below that? 1 or 2 TPOs, taken out all the stop losses and then reverse. So if you have exactness in the market, that is where Jim Dalton used to say that it is retail behavior because retail traders are looking at price action charts, candlestick charts, and when they find a high, they will treat it as a resistance. When they find a low, they will treat it as a support. All right. So, and that is the reason why these kinds of repetitive behavior patterns are seen on the chart, and that is exactly what we are trying to exploit. All right. So that is why poor highs and poor lows are important.